In the past week, we are seeing gold prices on the march again. So strong were the closing prices on Friday, July the 12th, that gold prices basis the COMEX gold futures are pressing on, challenging the all-time high of $2,454.20 per ounce, which was last traded on May the 20th. The catalyst this time is, of course, the cooler than expected CPI numbers for the month of June. At 3%, it is the lowest in terms of the headline inflation that we have ever seen in the States since the start of the war in Ukraine in 2022. Expectations are rising right now. From one cut this year, expectation right now has risen to 2, perhaps even 3 cuts before the end of 2024. As a result, we can see that the dollar has been easing back, and we all know the relationship between dollar and precious metals. As the dollar pulls back in expectation of imminent rate cuts, gold prices does looks like it is going to go higher. Now, I'll be referencing the COMEX micro gold futures to show you what I mean in this short video clip.
Now, I'll be using the COMEX micro gold futures to illustrate whether there is any trading opportunity in gold right now. Okay, the micro gold futures symbol is MGC, and this is 1/10 the size of a regular gold futures contract at 10 troy ounces, and the minimum price fluctuation is 10 cents, equal to $1, and the available contract for trading is every even month for the next 24 months. Now, like the regular gold futures contract, gold is actually deliverable, meaning to say that if you're holding a long position all the way to the last trading day, you are expected to take delivery, and if you're holding a short position, you must make delivery. And the termination of trading is on the third last business day for the contract month. And the last but not the least, refers to the margin required to hold a position overnight. Whether you're holding long or short, you need to have at the minimum for now $1,000 in your trading account. Okay, now let's get into the chart itself. Now, based on what we are seeing so far, we are looking at the weekly time frame first. Now, weekly time frame, we do not trade the weekly time frame, but we're using the weekly time frame to give us some kind of a roadmap. We can see from the weekly time frame, the gold market is in a massive bull market, with the high traded at $2,454.20 on May the 20th. And of course, prices has since pulled back a little bit, resulting in a counter trend trade represented by the pink color box here. Okay, prices traded to a high of $2,430.40 per ounce on Friday, meaning to say that it does tell us that currently there is a counter trend in place beside the dominant trend. So your question here is, do you trade with the trend, or do you want to trade against the trend, meaning to say that you are doing counter trend trade? Now, there are times to do counter trend trade, and there are times to trade with the market. Okay, so right now the prices has already left the perimeter of the dominant trend, meaning to say that for those who are very adventurous, of course, you can continue to chase the market. Then for people like me, then I will say, I look at the price and say it does not make sense to be trading with the trend with prices already so high. Okay, and what I want to do is to take a speculative counter trend trade. Okay, that is also possible based on what we are seeing in the weekly time frame. Now, this is the daily time frame. Of course, the chart will look slightly different. What we are seeing here is that the market is still having a dominant trend, which is still up. Okay. However, we also see that there is also the counter trend trade that I just mentioned in the weekly time frame. Now, as we are seeing in the lower time frame, which is 1 time scale lower, last Friday's high at $2,430.40 actually was the best price to actually go into do counter trend trade. Because if I'm wrong, then my risk is actually very well contained. But if I'm right, I have the possibility of gunning for $2,257.10. So again, from the risk reward perspective, it makes a lot of sense to trade counter trend right now against trading with the trend. However, earlier on, before the market rises over the last fortnight or so, we can see that prices did pull back into this area here, which if you have been watching the market, they would have allowed you to buy at very, very low risk. And this is the area where you would have bought if you have followed the system, because this area are where the low risk, high reward trade setup is. Because if you have bought anywhere within these two areas here, you are targeting a move towards the $2,588.60. Okay, so this is actually a fantastic risk reward ratio. However, if you have not already bought, prices right now is in the what I call very deep retracement levels in the counter trend. So you have a choice to do counter trend if you want to, again, based on your risk profile. Now, this is the 4 hours time frame. In this time frame, you can see that the dominant trend is actually down because the bigger box here is a pink color box. When you say the dominant trend in the 4 hours time frame favors the downside rather than the upside. And of course, we also have a counter trend right now. Is telling us that the market right now is already quite high based on where prices you should be buying. Now, if you have been trading with the market, then of course you want to buy within these two bracket of prices between $2,371.80 and then layer again $2,355.90. But prices is where the price is right now. It is in the dominant trend, counter trend, dominant trend, low risk trade setup perimeter. Meaning to say that by right you should be selling right now in the 4 hours time frame. The area to sell will be $2,428.50, and of course your initial entry here will be $2,416.90. Now make sure you keep your stop above $2,441.60, because if you are wrong, this is where you should be getting out with a small loss. However, if you are correct and the prices continue to trade lower, okay, your target is $2,255. So this is actually a fantastic risk reward trade setup. Okay, if you have missed buying, then you can also consider selling. So again, there will be different kind of traders who like to trade counter trend. So this could actually offer you one such opportunity. Now let's take a look at the one more lower time frame, which is the 60 minutes. Now this is 60 minutes. Again, here it looks very different. The dominant trend is actually up. Okay, so meaning to say that you want to trade as much as possible with buying position. But right now we have a counter trend trade that we see from the higher time frame all the way down to the 1 hour. We can see that where prices was trading as of Friday, prices went up to a high of $2,423.20, offers us the least risk with the highest reward potential, because if the market goes beyond $2,424.40, you cut loss and take a small loss. But if you are right, you are gunning for at a bare minimum $2,393.80, which offers you a superior risk reward comparison. Now, of course, this market right now may possibly be unfolding in a 3-wave pullback. So if that's the case, there is an alternate profit taking point, which is somewhere between $2,380.90 to $2,389. So you have two potential target. So being the more conservative trader, I will take profit at the $2,393.80 and wait for a chance for the market to go even deeper into this bracket of prices. Okay, this is where I will be buying, and the area here to buy will be $2,371, again at $2,374.40, putting my stop just marginally below $2,355.90. Again, it's always about risk reward ratio. If I'm right with the buy position, if prices do decay all the way into this bracket of prices, I will be a buyer, gunning for the possibility of the market rallying to $2,476.40. So this is how I would approach the market. It may be something that you can consider, and happy trading until the next time.